General Motors is one stock in Warren Buffett's Berkshire Hathaway portfolio, down 46%, that I think you might regret not buying on this dip here. In this video, I'm going to talk about why I think that's the case. So let's begin. Starting with General Motors revenue growth at a robust 23.41% in its most recent year. Uh, that's more than investors can reasonably expect from GM for the long term. You see here I have the 10-year chart of GM's revenue growth, and this is the highest rate of growth it has achieved in the last decade, and it came close to 15% in 2017, but for the most part, you can reasonably expect GM uh, for the 10 years to grow at somewhere in the low single digits. That's just what you can expect from this company longer term. However, in the near term, in the next year or even two, GM might grow at this robust rate again because there is, pent up demand for car sales because of the limited supplies over the last couple of years. So there's a lot of people that wanted to buy cars and weren't able to because they didn't find the model they were looking for, or because dealerships were marking up prices so significantly. And so as supply starts to come back online, I think demand for cars are going to remain robust over the next year or two because of that pent up demand. So that's good news for GM. GM also pays a dividend. The dividend yield is not great. It's 0.76%. So if you're a dividend stock investor, GM does have a dividend, although it's not very high. You might be able to experience an increasing dividend payment over time with GM, especially if the next 2 or 3 years are really good for GM's profits. Then GM could reasonably boost its dividend payment. Although I don't know how confident I would be in that because GM is spending a lot of money to roll out, its electric vehicle side of the business, and that's a capital investment, capital intensive, and so it's going to need to preserve a lot of its capital for that transition. So, yes, the GM does pay a dividend. It's not a great dividend, but it's there if that's, a requirement. If you're one of those investors that says, you know what, I won't invest in a stock unless it has a dividend. Well, GM does have a dividend. The dividend yield is not great, but it does pay one. The next thing I like about GM is the expanding operating profit margin. I have a chart here of 10 years of operating profit margin over the trailing 12 months. And if I go back to 2014, we could draw a nice upward line here to its most recent year where it experienced operating profit margin of 6.58%. So GM is getting better at improving its operations, improving its profitability, and that's good news for investors that it can demonstrate that it can grow its operating profit margin over time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the last reason I'm going to give for why you might regret not buying this Warren Buffett stock on the dip is because of the reasonable valuation, the inexpensive valuation. GM is trading at a forward price to earnings ratio of 5.65. That's near the cheapest this stock has been going back about a year and a half to January of 2022. And so you haven't been able to buy this stock at this low of a price. So this might be an excellent opportunity to buy GM stock at this low price while it's down significantly and has that strong tailwind with pent up consumer demand for new cars. So that's all I've got for this video. Thank you so much for watching. As always, I really appreciate your viewership, and I hope you'll tune in again next time for another video.